This is your LMAX exchange technical update for Wednesday, August 2nd, 2017. Euro dollar. So the euro has recently traded up to a fresh 2017 high. The market has traded up above 118 to about 118.50 ahead of this latest minor pullback. But we have yet to see some meaningful corrections in this market, with the market in an intense uptrend since breaking out above a critical range resistance from 2015 at 117.15. Daily studies are overbought and in need of a more significant correction before this market can consider a more significant meaningful push to the top side over the medium and longer term. And so the price action that we've seen on Tuesday, with the market putting in a bearish close, could set up the possibility for some form of a correction on the horizon. Ultimately, we need to see a break and close back below support, which comes in around 117.23, 117.24, that low from earlier this week from Monday, to officially put the pressure on the downside, take the pressure off the top side, and open the door for what could be a meaningful corrective pullback before the market considers the next higher low. Until then, while we hold above that low from Monday, the pressure remains on the top side, and there is still risk that this market extends higher towards 120. Sterling dollar. So cable is pushed up to yet another 2017 high, this time up through 132 and towards the 132.50 area. Ultimately here, the market is also looking a little extended, and we could see a short-term pullback before the market considers that next meaningful push higher. There is a measured move extension which comes into play at 135 following the breakout from that major range that we had seen off the plus 30-year low from October 2016, but the market again could see a period of correction before it looks to push up towards that measured move extension at 135. Look for a break back below some support that was seen earlier this week, so around 131, 130.97, let's call it, to put the pressure back on the downside and open the door for a potential correction and consolidation before the market pushes higher. Ultimately, though, the breakout in April above 127.75, the range top, does suggest that this market has finally put in a longer term base, and so dips should be bought as the market pulls back. Dollar yen. Dollar yen has been stalling out consistently in 2017 on rallies above 114. This latest rally above 114 to 114.50 stalled out yet again, opening the door for the intense pullbacks that we've seen over the past several days, which sets up the possibility for a retest of the 2017 low, which comes in just shy of 108. At a minimum, the setbacks could extend towards the support that we saw back on the 14th of June, which comes in at 108.82. Euro Swiss. So Euro Swiss has traded up into some fresh multi-month and two-year highs after the market took out the 2016 peak at 112. The break was significant as it's opened the door for the market to trade up to its highest level since breaking down in that historic breakdown on in January of 2015. Daily studies, as we've talked about in the previous update, have been highly overbought, and so despite the push higher and the possibility that the market continues to extend over the medium term up towards 120, with daily studies as extended as they are, it does open the door for a potential bearish reversal, corrective reversal over the coming sessions. A breakdown back below the low that we had seen in Monday trade, which comes in around 113.35, would however be required to trigger the onset of a correction and open the door for a pullback, which could extend back towards that previous resistance, now turned support, at 112. Aussie dollar. So Aussie is stalled out after trading up to a 2017 and plus two-year high at 80.66. The market could be looking to reverse course and put in some form of a correction lower at a minimum, but we would need to see a breakdown below some recent support, which comes in around 79.37, that low from the 28th of July, to set the stage for a correction and open the door for a deeper setback in Aussie dollar. Dollar CAD. So dollar CAD has recently traded down to a 124.14, a 2017 low, also a plus two-year low, but the market has been well extended to the downside and in need of seeing an unwinding of some severely oversold technical readings. This also follows a drop from May of 2017, which has been about a 10% move to the downside. We would, however, need to see a break back above the high from the 27th of July, which comes in at 125.70. 1276 about to strengthen the prospect for some form of a bottom, opening the door for a more significant correction to the top side in dollar CAD. Kiwi dollar. So the New Zealand dollar has recently stalled out at a 2017 and plus 2-year high of its own above 75, and the market now could be looking to roll over in favor of some form of a corrective pullback, but we would need to see this market establish a close below 74 to strengthen that outlook and open the door for those setbacks. Until then, the pressure remains on the top side. SPX 500. The S&P 500 is consolidating off its most recent record run in the previous week, up just over 2480. 2480 we've highlighted here as a critical measured move extension. This follows an 80-point consolidation that was seen earlier this year between 2400 and 2320, and so the market has pushed up to a fresh record high, and after meeting this extension could be at risk for some form of a meaningful corrective pullback to the downside. But while the market holds up here, the pressure remains firmly on the top side, and there is risk for continued record run towards 2500. At a minimum, the market would need to establish a daily close back below 2458 to alleviate the immediate topside pressures and open the door for a potential reversal lower. Gold. So gold continues to be exceptionally well supported on dips. The market in recent months has been supported on dips ahead of 1200, most recently being supported in early July ahead of 1200, opening this latest bounce back above 1250, and the market now is focused on a retest of the 2017 high at 1296. A break above that level would expose a move up towards the 2016 peak at 1375. Overall, this price action, again on a medium-term basis, is showing signs of a market that is looking increasingly constructive and potentially putting in a major base. We've also seen a longer-term contraction in volatility, all pointing towards a breakout to the top side, a significant run to the top side. Only back below 1200 would compromise the constructive outlook for gold.